Okay. Okay, now again, can all of you hear me right now? Okay, I think there's some problem with my audio. So I think right now all of you should be able to hear me loud and clear. So if you can hear me loud and clear again, please type okay. And I will start right from the top. Okay, so again, can hear me? Just type okay. Okay, some technical stuff that I said, so should be fine right now. Okay, wonderful. Okay, hi, Seo Boon, hi, Kathy, hi, DT. Thank you, all of you. Apologies just now for the technical error. So, what was I saying? A very quick recap. I was just sharing that what we'll be going to go through today, right, is actually. Okay, so if you guys are ready, please type ready in the chat so I can see a lot of you in the chat right now. I can see okay, Serene, Karen, Arina, Sunda, Hon Fong, DT. Wait, what happened to the sound? Funny. Okay, is it better now? Is it better now? Hopefully the sound is better now. Okay. So I think I was just toggling some stuff and it created some error lah. But I think it should be much better right now. Okay, awesome. Now, so what? Let's start off with looking at some straightaway charts first. Okay, I'm going to share my screen right now and let me know if all of you can see my screen. Okay. Now, can everyone see my screen? Okay, this is the S&P 500 chart, and we will all start from this chart to understand how the chart is moving to give us a more holistic view. Okay, so let me double check the audio. Okay, can I check? Is any one of you still facing issue with the sound? If y'all can hear me, I just want to make sure that before I proceed on, all of you can hear me loud and clear. So if ready, just type. If you can hear me loud and clear, type okay. Okay, chart okay. Can hear me? Type okay. Okay, so I make sure that everything is fine. Okay. Okay, great. Now let's get started. Now, so let's look at the S&P chart first. Okay, what's going on? Now, you guys can see we have been in a pretty strong rally actually ever since 2023. Right, late 2023, the market has been in a very strong rally until you can see you guys look at how trend is okay. So what we're looking at is trends so you guys can see what I'm drawing now is what we call a support and resistance line. Okay, so roughly you guys try to touch as much point as possible. You guys notice that from 2023 and 2023 until 2024, right, we have been on this road up. Okay, that means a very, very nice uptrend. But what happened after 2024 until 2025, February 2025, so 2 months. Notice that we started to move in a bit of a sideways movement. Okay, so let me draw it so you can see. Started to move in a bit sideways right over here. You can see okay, so this was when will this happen okay, do you guys know actually what happened during this period or not? So if you guys know what actually happened during this period, just type in the chat okay. So and I'll let you guys go and type first before I review it but right after that, right, something happened in February, and then suddenly we had this insane correction downwards. This red color box right all the way down, and I think all of you would have known what happened right over here Okay, so this was when the Trump tariffs happened. Right, the Trump tariffs happened. And it caused the market to have a very, very strong reaction. Okay, and it's quite a big reaction from then. Okay, so you see, right from the top, it corrected 20%, guys. 20% from the top correction is a big correction. Okay, why do I say it's a big correction? Let's look back in history. Okay, we look at the earlier corrections and we see how much the S&P has corrected so far. So all of this is sharing to give you guys context first. So you see, if we look at the earlier times, how much S&P has always corrected. This was a 9% drop. This 5% drop, 6%. Okay. Now, this is over a prolonged period. Okay, so let's track the whole prolonged period. Even the whole of during the 2023 period when they had this from July to October, it was a 10% drop. Now, okay, now this is a prolonged period, which is the whole 2022 period. You can see this was a bit mad. Okay, it was like a 26% drop. But how long was this by? This was on a 10 January to October, over a 9 months period, we had a 27% drop. Okay. Now, if we look at the Trump tariffs, guys, this is a 21% drop in a matter of 2 months. So you guys can see how this was kind of like a very, very, very anomaly. Okay, a unusual case. Can you guys see that? If you guys can understand what I'm talking about, from how we draw the charts, you can see how usually S&P is correct. And even looking at the whole 2022, where we had a very long downtrend for over 9 months, 27%. Comparatively, right now on a 2 months period, during the Trump tariff, a 21% drop. If you guys agree with me that this is abnormal, right? This is unusual. Please type in the chat, unusual. So I know that all of you know what I'm talking about. Okay. By the way, for those of you who couldn't figure out what was this period, this was when Trump was inaugurated, right? This was when he became the president. So there was uncertainty. People don't know what he was going to do, right? So that I see the stock market was trading sideways. So you guys can see, right, how unusual it is that during this 2 months period there was a very, very strong 21% drop. So this is unusual. Okay, but let's look forward. Okay, I'm showing you guys exactly how I look at the charts and what are people thinking about. So after that, okay, so after the tariffs, the thing happened so and so far. Then we had another rally up, okay, which is where we are until today. And you see a very, very sharp rebound. Okay. Hey, I only see Sunda and Siobun type unusual. Where are the rest of you guys? Come engage with me, right? Chit chat with me a bit. Let's take this more as a two-way chit chat session. Cannot only be I share one way, right? I want you guys to also let me know what you guys want to see, right? Because later if we have we can have some time to look at some charts, and I'll just take some of the requests in the chat, right? If you guys want me to do that, if you guys want me to take some requests from the chat on looking at certain charts, just type yes in the chat, okay? And I'll only pick from those who actually engage with me, guys. Work with me, right? Let's be friends over here tonight, Okay, so you see, hi Leila, hello Leila. Okay, so you see, sometimes what people are thinking is that, hey, Bjorn, I think some people miss the opportunity during this crash, and some people are thinking that I think I'll wait until the next crash happen, then I enter the market, right? They kind of like, some people are thinking like, oh, I won't wait until it drop like Trump crash like that again. But guys, can you guys see this is unusual or not? Okay, unusual, that means it's not all the time it will happen one. Okay, and even if you look at usual corrections, okay, it is roughly around 6 to 10%. Okay, this is a huge anomaly of 20% in a very short period of time, and it rebounded so quickly. Right, you guys see COVID also. COVID is the same thing. Now we see COVID again. This was also an anomaly. 35% drop in a matter of, how long is this? Let's look at 35% drop in a matter of 2 months or so. Right, even worse than the Trump. But then you see, it just rallied all the way since then, guys. Imagine if you say you were waiting for the next crash. Imagine you say you wait for the next crash, it's never going to happen, or you have missed this level of activity. Okay, so screen rest in slow Hong Feng. Okay, let me see. I think we are at 180p now, Hong Feng. So not sure. Maybe you can try to see the YouTube settings, Okay, but let us check on the back end, Okay, later, and make sure that the next few sessions are okay for you. Okay, so now let's zoom in again to our current day and age. You can see that right now we are in a rally now. Okay, but what has been, so you see we are zooming from a very far peak, right? And we zoom into a very, very close look now. See, guys, if we zoom in very, very, very closely, you'll notice we are in still a bit of an uptrend, right? A very, very short uptrend. Okay, very short uptrend still, guys. Okay, so are we moving sideways? Are we retreating? It looks on the uptrend, at least on a short-term basis, even though last Friday we had this correction. Okay, now, one thing that I want to share with you, okay, so this is the chart I'm looking at, because the S&P, this is the first chart I'm looking at. The S&P is the overall index that kind of measure the US stock market. So so we have to go and monitor. By the way, if any of you is facing resolution issue, just let me know lah. Okay, is this anyone? Is it blur for every one of you also? Let me know if it's blur. If okay, just type if the screen rest is okay for you. Um, just let me know whether it's okay lah. Just type okay if it's okay. Okay, but Hongfeng, never mind. If you let's say the rest is low, don't worry. Okay, I'll share with you guys what exactly I'm looking at, and you just listen to my voice. Listen to my voice can already. My voice is more important than the chart lah. Okay, and I'll also try to speak a bit slower. So you see, we are on an uptrend. But guys, I want to share with you this particular concept. Okay, this concept is what we call RSI divergence. Okay, this is just for context, this is a technical analysis concept. A technical analysis concept. Okay, this one is something that we teach in detail in our class, but I'll briefly explain to you guys. So what is this what we call RSI divergence? So first of all, RSI is basically what we call the relative strength index. Okay, the relative strength index. So basically is what we call a momentum indicator that measures the whether a particular stock or index is overbought or oversold. Okay, Hanming, the is one is 30 and 70. Okay, default one. So you can see over here, traditionally, an RSI reading of 70 or above indicates overbought. A reading of 30 or below indicates that oversold. Okay, so this is why it's RSI. So you guys can see from my chart, this bottom is on RSI. So you can see 70 and 30. So when it's above the 70 is overbought. When it's below the 30, it means it's oversold. Okay, that's the overall concept. But I want to go one step further and share with you guys this unique concept called divergence. Okay, not to go deep, very, very deep in detail. But I want you guys to look at this thing called bearish regular divergence. Okay, bearish divergence. See, my mouse, I cannot circle on the screen, but it's this one. Okay, regular divergence. So wait, can you guys see? Wait, let me see if let me try to stop share. And then I try to show you guys the divergence. Okay, okay, let me share the RSI divergence. Okay, so again, this is what I'm referring to, the RSI divergence. Okay, so this is the main thing that I want to bring your guys' attention to now, which is what we call the bearish divergence. So what is RSI? Okay, it's called the relative strength index. So it's a momentum indicator. Okay, so this is on Investopedia, where we measure the speed and magnitude of security price changes. Okay, and let me, this is the one. Okay, it measures the speed and magnitude of security price, basically whether a stock is overbought or oversold. Okay, and I want you guys to look at this thing, what we call the bearish divergence. Okay, so I will just touch on this here. I want you guys to first focus on this top box, regular divergence bearish. Notice how the price is increasing and the indicator, which is the RSI indicator, is actually decreasing. This is what we call a bearish divergence. Okay, basically what this means, the price is going higher, but there are lesser buyers coming in. Okay, so if you are a bit confusing, don't worry, just see how the chart is. Price is going up. Can you see? I draw the line on top, is going higher. And the RSI below, the line is going lower. Okay, look at this, going lower. Now, let's go back and look at the SPY chart. Okay, let me switch the tab. Now, again, I've drawn the line here. You guys can see it's an uptrend, right, from July until September. This is the daily. Now, this is my RSI chart. For the same period, guys, let me show you guys something. Let me draw the line. Okay. Do you guys see something or not? Don't know, y'all. I zoom in a bit. Y'all can see now. Can you guys see that right at this point, there is actually what we call a bearish divergence? Okay, I'm going to write here. Bearish divergence. Okay, bearish divergence. Can all of you see that right over here, the bearish divergence? If you can see that, just type RSI in the chat. Okay, if you can see, type RSI in the chat so I know all you can see. Okay, can you see there's a bit of a bearish divergence happening here? Okay, so if you ask me, hey Bjorn, does it mean the market is going to drop or not? I'm not sure. Okay, but of course, based on trend, based on technical indicator, this is what we are seeing now. Now, if you look back in history, my friends, if you look back in history, you guys will see something a bit interesting one. Okay? Right at this point. Right at this point, which is in December to March 2024. Now, let me draw the line again. Notice this uptrend. And what is happening here? Do you guys see that? Right. And what happened right after a while? Okay. Stock market dropped 6%. Of course, not as insane as the 20%, but it dropped, right? I mean, the whole idea is that there was a correction, right? There was a bit of a sign. Okay, let's look at, see whether you can find one more. Okay, so we see, let's look whether there's any more. So it's not easy to find, but if you guys find, you can kind of like see a little bit of picture. Generally speaking, you want to see it like that one. You go up here, then your here must also go up. This one okay, parallel lah. Parallel go up is good, guys. Okay, so you all no need to like, oh wow, Bjorn says drop means very bad, okay. Now you guys can see, here got a little bit. Okay, again, this is just for you guys to kind of like learn and see how things are. Okay, so you guys can see, right from this, let me try to find the earlier part. There was a bit of a divergence around here also. You can see, right at this point. Here, from here, we are going up, and then we plateau a bit. We had a very, very minor correction, but you guys can see at most if you draw the line, before COVID, even though COVID was an anomaly, but you guys see how the chart, can you see uptrend? Notice something? Right, and what precedes after is COVID Coincidence? Maybe it's a coincidence because how can so soon the RSI predict the COVID one? This one is like, I believe this is coincidence But the whole idea, right, is to show you guys the whole concept of RSI so you all can apply, and this can be applied to stocks and anything also. And one thing to take note, it doesn't mean that once we see a bearish divergence, the market will drop straight away. No, it doesn't mean that. It can happen anytime. It can happen like 2 months, 3 months later. Anytime it can happen one. So this is a lot more of the indicator. Glenn says right. Glenn says exactly right. Look at this. December 2023. Let's look at what Glenn saying. You see, right? December 2023 to April 24, right? A lot of divergence, but market keep going up. Yeah, Glenn, this is exactly what I mean. That means this, like what it says, is a momentum indicator. It is just an indicator. It is not the whole golden Bible or the golden rule to say that a crash is going to come tomorrow. A crash is going to come next week. No, it doesn't mean that. Because you can see this period, how long did it kind of reach that point? It is for 4 months. Before there's only a small correction. And I want you guys to pay attention to this. Okay. Notice that even a correction happened. Even though this small little drop happened. Do you all notice that even the lowest it dropped, it is still higher than the highest point? Yeah, correct. Even though the lowest it dropped, it's still higher than the first highest point at December 2023. Can you guys see that? If y'all can see, right, just type yeah, YA. Just type yeah in the chat. Okay? You guys can see, right, that it doesn't mean that even though the RSI, you will see this kind of thing happening, that, oh, the market is going to crash. Oh, get out, sell all your stocks. Okay? No, it doesn't mean that. In fact, if anyone tell you to sell all your stocks, guys, I think you depends on what stocks you hold. But generally speaking, you don't need to sell. Because you see, this indicator tells you, right, it doesn't tell you to, it's not an indicator to say it's time to sell your stocks. It's time to stay on the sideline. Never. Okay, don't ever do that. But this indicator tells you one thing, to prepare yourself. Okay, type prepare in the chat. Okay, type prepare in the chat. This indicator just tells you to prepare yourself. Because if, let's say, a correction comes which you don't know when, right, you want to be prepared. You don't wait until the time comes where it's like, everyone is like going army. Everyone wear the full battle order, going ready to get war. The war start, then you start to wear. No lah, correct. Cannot. You must wear first. Stand by. Because you know that, maybe this thing is going to happen already. So I make sure I prepare first. Right? And what does preparation mean in the stock market? Preparation means that, okay, knowing that if you you suddenly have a lot of over leverage or you have a lot of trading positions, maybe it's time to scale down, right? Or if you have a lot of cash in hand, you don't go trigger happy and go and buy stocks now, okay? You want to be a bit more cautious. Okay, hey, okay, very awesome. I see Bjorn, Demure Mangosteen. Oh, I love your name, man. Demure Mangosteen is a very nice name. Okay. Lee CP, hi CP, nice to see you here. Awesome. Hong Fong, Karen, nice to see you, and Siu Boon, very nice to see all of you. Thank you all for support. Please get all your friends and family come and join this also. Okay, this is like golden nuggets. I tell you, I'm literally giving to all you guys for free. Okay, so make sure you like and subscribe. Yeah, most important, like and subscribe. So you guys can see to subscribe to our Next Level Academy, the YouTube. You just like, subscribe lah, and then like also lah, support me a bit. I see you all support me. I will come out and do more lah. Okay, that's my promise to all of you. Okay, done. Okay, so this is the first chart. I want all you guys to take note. The S&P. Okay, so again, be prepared. Okay, it's not to go and predict and say that, hey, I think I'm going to sell everything lah. No, the worst thing you can do is to be sideline in the market. Okay, what do I mean by that? Okay, let me show you this chart. Long term, very simple one. I tell you, this chart I always look at it anymore. Okay, long term stock market chart. Okay, so you see with let me add one more. Long term with geopolitical events. Okay, I always share this chart with everyone. Okay, you guys can see this one just from 1941 to 2001 you all can see, right, since 1940s there are a lot of events happening. All kinds of geopolitical events. Geopolitical can mean everything. Geopolitical can mean Trump, can mean Ukraine war, anything lah. But what do you all notice in the long term? Uptrend or downtrend? Uptrend type up, downtrend type down. Okay, you guys can see, right? Okay, you can see that long term it is still up, right? So the thing is, right, most people is, okay, wait, Bjorn is not looking at my screen. Okay, sharing my screen. Sorry, I need to keep toggling. My mistake. Cause I've too focused on it. Okay, I'll be a bit more careful. Okay, again. Okay, now I show you guys. Hopefully y'all can see this screen now. It's got reasons to sell. So y'all can see that in the long term, right, despite all the geopolitical events, okay, despite all the geopolitical events, you'll see that the chart is still up at the end of the day. Right? It's still uptrend. So even though Glenn says, yeah, trim short term and risky trade, exactly, short term and risky trade. But see, guys, even if you do nothing, if let's say you do nothing, or even if you have no cash, you're fully invested, you do nothing, hey, in the long run, you'll be fine one. Right? But what is the caveat here? The caveat here is what? You must invest in high quality companies. Right? All of you type HQ in the chat for high quality. Because if you invest in weak companies, you invest in companies that are not making money, you invest in companies that are risky, then obviously in the long run, you will drop lah. Correct or not? So that's why we say that whenever we invest, guys, we want to think of the long term while looking at short term on how to prepare ourselves. Of course, for those very simple one, right? Like really don't want to do anything. Actually, you invest long term also fine one. But short term is to see whether you have an opportunity because you always have cash to come in. Correct? You always have cash coming in. So when you do that, then you find all these short term, how the market is moving in the short term. You prepare yourself. Then the opportunity comes, you strike. All right, that is how we do it, right? So that we can, in a way, find better positions, better options. Because the thing about sometimes investing, right, is that yes, in the long run you make money, but actually the price you buy, right? Example, if you buy a company at a very high valuation, right, you might take longer time to break even, especially when the correction happens, right? But if you buy it at a very fair valuation, the odds of you making money and higher returns in the long run is higher. Okay, so I want all of you to remember that. What I am teaching now, you guys, is teaching you to look at the short-term data and how to train your mindset. Okay, how to train your what we call millionaire mindset. All of you type MM in the chat for millionaire mindset. Guys, this kind when you learn already, right? This is a lifetime skill. This one it's not like you learn today, you forget. I want you guys to absorb this totally. Okay. Now at this next point, guys, I want to move on to the next chart that I'm looking at. And like what I shared at the start, right? It's not only stock charts that I'm looking at. Okay. It is actually macro charts. Okay, macroeconomic charts. Why? Because you guys saw the divergence, the bearish divergence happening, right? So what are the information now that can give us more idea of perhaps maybe when this is happening, even though no one can predict. By the way, guys, anyone tell you they can predict like, oh, the stock market is going to crash next month or what? Hey, guys, just delete them as friend and unfollow them. Okay, even if I say predict, no, that no one can predict the stock market. Okay, unless they got a crystal ball. unless they are a wizard, that they go to the Hogwarts, then they got the crystal ball, they know where the market is. No one know lah, okay? Even I also don't know. So, but then I'm sharing with you as much of the information we get, okay, as much as all the information we get, what can we form an idea in our head? And the first chart that I want to share with you is actually this one, the unemployment rate. Okay, now this is not the chart I'm monitoring, but I'll explain to you what is this chart. Okay, let me show you guys a better chart, this one. Okay, this is a better chart. You guys see, this was actually released last week. Okay, but I'm really looking at it. Why? Because how the market moves, right? Okay, is actually determined by two things. How the market moves in a short term, short and mid term. And what basically everyone looks at is two things. Number one is macroeconomic policy. That's the first thing. The second thing, right, is company fundamentals. Okay, company fundamentals happens every single quarter. That means Q1, Q2, Q3, Q4. Q2 just over already. There's nothing for the market to look at. So what's the only thing that everyone is looking at now? Macro data. Okay, so now the Federal Reserve, their goal is to manage two main parts, which is to reduce unemployment, manage unemployment to a healthy rate, and second, to ensure inflation don't go past a target of 2%. Now, what do we see unemployment right now? You guys can see unemployment since 2024 August, which is just 1 year ago, it has been around 4%, 4.1%, around there, about the same. Now, it has slightly inched up to 4.3%. Okay? Unemployment means what? Higher unemployment means what? Means lesser people are getting a job. Right? Lesser people are finding job now. More people are unemployed. So is it still at an alarming rate? No, it's not at an alarming rate. It is still around the target, which is fine. Okay? Now, this is the first chart. The second chart is this one. What we call monthly job creation in the United States. Okay, monthly job. By the way, this one breaking. Don't focus on this, guys. Focus on me first. Y'all don't see breaking, then go and Google the stock chart. Focus on me first. This one is more important. Okay, once you understand this, you will know how to look at any other stock charts already. Now, monthly job creation in the US, guys. Do you notice is at a downtrend or not? Right, since 2022, until now, guys. Back in June, because whenever the Bureau of Statistics, they actually release the data, right? Okay, they can actually revise the past 2 month data. So in this case, right, if let's say this month I released 22K jobs, I can revise the last 2 months to be as how many jobs and all one. Okay, now two things to take note here. Number one, latest August job data is 22K. That is the first thing. Second, in June, guys, this is the first time since 2022 January that there was negative job creation. That means, you know what does negative job creation mean or not, guys? Negative job creation means there is no new jobs, but there are jobs being removed. Hey guys, this is scary. You all just imagine in Singapore context of this happening. It's a bit scary. Okay. So basically, and then it matches with the unemployment increasing, guys. And also I don't know about you guys. Maybe y'all can let me know in the chat. Maybe it's just me. But do you kind of like notice maybe I don't know. I mean, y'all can let me know. That I notice some of your, maybe y'all go on LinkedIn or some of your friends and stuff. You notice that people are getting a bit even the peers in the 30s are actually getting retrenched or not finding a job. Do you all notice that or not? So if you all notice that, please type yes in the chat. I'm not sure if it's just me now, because like recently CNA, right? Let me Google first, then I show you guys what I mean. So even recently, let me open up. Okay, let me there's this article in August that came out from CNA. Okay, I'm going to switch my share screen now. This is something that I noticed. This is for fresh graduates okay, that is finding it tough in the job market right now. Okay, I see quite a lot Leila, Karen, Ziran, Demio, Mangosteen, and Siobun that you guys are noticing this. I also notice and of course it's a bit concerning right? Because to me, when you start to see a lot more people, right, it tells you a big picture. It's this big picture it's kind of a sensing. Okay, SJ, no, it's not normally 2 months away. Okay, it's like the current month, but they can revise the past 2 months data. So the June data, when it's negative, right, it kind of like precedes is it down the road, like now in August or September, is it something is going to happen or not? So that is the whole idea of how job creation works, okay, in terms of this data that they present. So you see, Glenn, business slow, no expansion. Yeah, exactly. So this is what is happening now, lah. Okay, and going back to the job creation tab, this is actually good for the markets. On contrary, even though you think like, wow, shit, everyone is unemployed. Pardon me for the language. Sometimes I like to be just very straight. Okay, I hope you guys don't mind. So when more people are out of job, okay, when more people are out of job, when there's no new jobs, what does the government want to do? The government will want to spur the economy. They want more people to go and spend more, They're right. They want more people to spend more. They want more people to businesses to borrow money. Like what Glenn say, right? Glenn says interest is too high. So what they want to do? They want to get businesses to borrow more money so they can hire more people. And how to get business to borrow more money? They reduce the rates. Right. So you can see when unemployment goes higher, right, it's good for the stock market because the Federal Reserve will make the rates cheaper so that people can borrow more. Okay, so the consumers spend more. Simple as that. Okay, so this is the whole idea, which is the main thing. Now, this is the unemployment, and actually, what we see the SPY share price okay, what did we notice actually guys, if you guys see the charts again okay, if you guys see the charts again, right, okay, I'm going to delete this bearish divergence you guys notice, right, actually on the day itself for S&P we open here, okay, we close here, we open not as we open here around here. Okay. The price actually went all the way up first when the data came out last Friday. Okay. When the data came out last Friday, the price actually went all the way up here. Okay. But then because they say unemployment increase, so unemployment increase means the rates will increase. Correct. The rate cut will happen, right? So it's good for stock market, That's why I see the price went up. But immediately on the day itself, the thing reversed straight away. And the S&P closed rate negative 0.32% on the day. Right. So what does this mean? It means that initially the market were excited. Oh, okay, unemployment is high, rates are going to cut. But immediately, it corrected straight away. It went to negative territory straight away. So what does it tell you about how the market is viewing this kind of news, right? What it tells you is that the market is viewing the rate cut as a confirmed 100% thing that is going to happen. I repeat, what this tells us is the market has really kind of confirmed that a rate cut is going to happen. Everyone is 100% expecting a rate cut to happen. That's all. Until when there are signs that tells us that the rate cut is happening, okay, when there are signs telling us that rate cut is happening, market is immune already. I give you guys a perfect analogy. Imagine that you all have a kid. Okay, then the kid come to you and say, hey, mommy, daddy, hey, my test is coming out. I am very confident. I'm going to get 85 out of 100. Okay, I'm very confident. And then during the test, then before that, the kid maybe had a lot of other tests, and the results are like 90 over 100, 80 over 100, and things like that. And the tutor say that, oh, this kid is very good. Teacher also say your kid is very, very smart. And your kid keep telling you, I'm going to get 85 or 100. Then, of course, you as a parent, what will you do? You will have expected, right? Hey, yeah, okay, my kid is going to do 85 or 100, right? You already have the expectation, right? Now, imagine if your kid come back and really do 85 over 100, how will you feel? You're like, oh, yeah, lah, you already tell me 85 over 100, lah. So, yeah, good job. Yeah, okay, great, awesome. Right? That's the reaction. What happens if your kid comes and says that, hey, I only got 80 over 100? Well, I tell you, even though it's a good score, right? You might think that, hey, but you told me 85 over 100, leh. All your score earlier like 90 over 100. How come you're this one 80 over 100? You see, the disappointment comes in. This is a perfect analogy, right? Okay. And then but if your kid comes in and tell you, say, hey, I'm getting 90 over 100, you were like happy, but you already kind of like know that, hey, okay lah. I mean, I know that he's 85, he told me 85. 90, you're happy, but you're not like, wow, damn surprised. As compared if your kid is like 50 over 100, then suddenly come back 85 over 100, you see that the difference is drastic. So the stock market was in similar way. It was in expectations, right? Now everyone is expecting that the rate cut is going to happen. If a rate cut don't happen, that's it, GG. Okay. But if the rate cut happen, the reaction will not be as big as what everyone thinks already. Okay. So this is what where we are right now. And when the rate cut happen or not, in my opinion, it will lah, because the data points to that happening, and the Fed relies on this data a lot. Okay, so this is what I'm thinking right now. Okay, so Demio Magazine had a question. Demio Magazine, he said, will the displacement of traditional jobs, traditional job employment to other income general affect key metrics during market sentiment, so opinion, affiliate market role? Okay, so Demio Magazine, I think in a way it will lah. Okay, it definitely will, because to be honest, if do I have a 100% answer to your question? I don't have also. Honestly, I have no idea, right? Because for them, how the Federal Reserve measure these kind of measurements, right, is actually through like those professional hired people that works lah. Why? Because those are the bulk of the workforce. Correct. They cannot be measuring it based on all the solopreneur, all the people that are working on their own, like business owners and things like that. But they measure based on where the majority of the workforce are, which are salary workers lah. Right. That is how they measure those kind of unemployment rate lah. Across the world, it's all the same. Okay. Okay. So TSJ says, hi SJ, nice to see you. But if rate cut is because of job data instead of to boost inflation, exactly. Right. You know what's the kicker here? Okay, now TJ, thank you so much, because now you lead me on to the next chart that I'm looking at, which is this chart, the consumer price index. Okay, leads me on to this chart. Okay, now I want you guys to think, let me know in the chat, if let's say prices, you got more money in your hand. Okay, because the rate cuts are cheaper. The rate cut happening, money is cheaper to borrow. Businesses can borrow more, they can hire more people, people got more salary. Let me ask you guys, when you guys got more money in your hand, do you think you will spend more or save more? Just generally speaking, you all no need to think like, oh, I'm a frugal guy, I will save more. No, just think, generally as a human, right, when you all got more money, you all will spend more or save more. Spend more, just type spend. Save more, just type save. Okay, because you see, what we are looking at this kind of data is based on consumers' psychology, consumers' preference. And you can see this US consumer price index, guys. This was during COVID, okay, where interest rates was 0%. Everyone else got stimulus check. The government give us like the COVID package, like crazy one. Every few months, COVID package. Then CDC voucher or something like that. Utility bill offset, town council bill offset. Right, during that period, you're all familiar. We're all Singaporeans. We all receive it. Okay, but we are not the only one that receive it, guys. In US, they also got stimulus check every few months, right? Even people who are unemployed, they sit at home. What they do? They use their PC, or they learn how to go and invest in crypto. They learn how to invest in stock. Then the government mail them money. Right, they got more money. What they do? They go and spend more, invest more in the stock market, go and spend more on goods and services and everything. That's why you can see inflation suddenly run up all the way to 2022. Okay, then what happened after that? Suddenly the government say, right, just think of Lawrence Wong suddenly say that, hey, sorry guys, no more CDC voucher. From SG60, I give you all each $600. Next year onwards, I only give you all $100 for the year for CDC voucher. Wow, suddenly you feel very poor. Right, suddenly you're like, hey, why suddenly my supermarket voucher only got $50 to spend? Last time got $300 to spend. Now suddenly $200. So this is what happened in 2020, around the whole world. Government stopped giving out stimulus check. Government started to, the Federal Reserve started to increase interest rates. Suddenly everything becomes so expensive. People don't want to spend, start to save more. Then everything dropped. Okay, and it continued on. That's why you see the whole stock market, right? Those kind of high growth stock, they crash. But gradually you can see it kind of stabilized since 2023 onwards. Okay, but then guys, now again looking at right now. Okay, so there's two charts. US consumer, all items less food and energy. So basically the Federal Reserve will look at the less food and energy one, because these are less volatile. You all notice, I'm zooming in a bit. Okay, you all notice, guys, we have been on a downtrend since January. You see, down, and now we are going back up. Right, July we are up 3.1%. The core CPI. Basically, it means goods are getting more expensive. That's just basically what it means. Okay, consumer prices are getting more expensive on our consumer end. Okay, so this is the first sign. Okay, you can see now. This is the first thing. Now I'll bring you guys to the next chart, which is the fourth chart I want to share. Okay, apart from the S&P. So you see, guys, today I supposed to share with you 3 charts only. I share with you guys 5 already. Right, S&P chart, unemployment chart. What's the one? Job creation chart. CPI chart. Now I'll share your PPI chart. So hey guys, you all come here. 129 of you here, you all got a bargain. 5 chart instead of 3 charts. Okay, we're going to look at stock chart after this, right after this already. Now, the next one is what we call US Producer Price Index. So this is looking at supplier. Because if cost increase, it will increase on the supplier side first. So what do you notice? 3.3% right now, the PPI. Again, yes, the less food and energy is 2.8, a slight inch up, but you compare the other one, I tell you, the increase from 2.4 to 3.3 is a big one. And at that point in time, this scared the market. Because people say that, hey, shit, Well, is it tariffs will be bad or not? Because guys, imagine rate cut drop and you got more money to spend right? And things are already expensive. The price index CPI, PPI is really high, and you spend more. Do you guys think the 2021 period will happen? This is extreme case lah, but let's assume the whole idea is the uptrend PPI and CPI or a downtrend PPI or CPI. What do you think? If let's say the Fed cut rate and that means everyone got more money to spend, right? Do you think that the PPI will probably guys, will it go up or go down? Type in the chat, up or down. Okay, because this information, this exact information of you thinking, right, of me sharing with you all this, right, it will tell you guys, okay, what to expect. Exactly this. Okay, because if things get more expensive, then what, people will stop spending, right, to a certain point. You just think, if let's say now your chicken rice, now last time we eat chicken rice $3. Now chicken rice minimum smelly $4. Imagine one day suddenly you go coffee shop, they say, hey, 大哥你的鸡饭6块. Okay, to English is like suddenly say now your chicken rice $6. Well, I tell you, you will still eat. But maybe instead of 1 week you eat 3 chicken rice, 1 week you only eat once. Because wow, damn expensive. Correct. The same thing is going to happen, right? If things are more expensive, people start to spend less. Correct or not? Okay, spend less is one thing, guys. One more bonus shot for you all. Okay, what happens? Oh, why come this one not working? Okay, let me refresh this. What happens when our wage don't grow? Wow, this one I tell you, this one is probably something that actually every one of you confirm you all got feel in your heart one. Confirm, you all got feel, right? How come my things getting more expensive? How come my old chunky curry puff from $1 become $2, but my salary only increase only increase 2% every year? Right, do y'all feel this before or not? Like your wage growth grow very, very slow. Okay, type in the chat. If y'all feel this before, just type yes in the chat. Okay. Jay says, why should this? Why not live trading? Jay, very simple. Market is not open. How to show you live trading? Right. We are not doing trading stocks here, correct? If you're looking for live trading, this is the wrong place to be at, brother. Okay, this is the wrong place to be at. But if you're looking to learn how to understand the market in the short term so you can position your portfolio for long-term growth, you are in the perfect right place. Okay, simple as that. Okay, so but what we are going to look at is then after that how to prepare. Okay, what I'm teaching is how to prepare. What live trading? What for? I show you all live trading. What you all learn from here? You all see this, copy, then what you all learn, right? I'm teaching you guys to be fishermen. All right, how to learn how to fish yourself. And when you all learn how to fish, whatever fish you all want to catch, you all can catch. Simple as that, right? Right. If I only teach you all how to eat salmon, you all eat salmon, then why one day you don't eat salmon, you all eat something else? Right? Hey guys, I'm being very honest with you here. I have nothing to go and I'm not here to say that, oh yeah, don't worry, we'll do live trading. No, I'm not that kind of guy. If I'm not doing, I'm not doing. If this is not suitable for you, it's not suitable for you. Simple as that. And I don't blame you because all of us have different risk preference. Right? But what I'm teaching you, right, is to learn how to be fisherman. Okay, every one of you type fisherman in the chat. Okay, yeah, pre-market can trade but I'm not going to do that because that's not my goal for today. Simple. So if you want to do pre-market hours trading, go ahead, right? Go and but this is not the place That's what I want to share with you Okay, so feel free to go and find other place that pre-market trading. Feel free to just follow their stock, but that's not what I'm going to do. I'll just be straight up with you. Okay, simple as that. Now, after you guys know all of these wage growth and chart, now we're going to move to charts again. Okay, now. So I know that I'm supposed to send 3 but whatever I can share with you, I can share with you Okay, what other charts am I looking at? S&P is one. The other one I'm looking at is QQQ, of course the index. And I can tell you that this will be one of the best stock to build position in. This will be one of the best stock to build a position in the long term. Right? Simple as that. Okay. Similarly, okay, so you can see that how QQQ moves. What QQQ is a technology stock. Okay, it's a technology stock. And it kind of like Nasdaq 100. Okay, so let me see. Okay, if you guys want to see QQQ, Yahoo, just like QQQ, Yahoo Finance. Okay, so simple over here. Okay, so this is QQQ over here. Okay, Nasdaq 100. Okay, so it's more tech focused. Okay, now if you look at the charts, the QQQ 100 chart, you guys has been seeing we move in a sideways. But now I want to show you guys something interesting. This one I draw for you all to see really Okay, you all can just take it and see Now this is how we draw support and resistance. You guys can see when there's an all-time high there is always like this tip mountain tip and this is a psychological resistance, right? People see all-time high, they think like, hey, this one is a resistance but once it has break above, it becomes a support. That's why you see here over support over here. Okay. Now QQQ similarly, guys, y'all can see also QQQ. This one is not as bad as the S&P. This one actually okay, a bit lah. I mean, not as much, but you can see this one is not the same divergence that we saw in the S&P, right? But you can see that this is actually aligned accordingly. Okay. What does this tell us? Okay. What does this tell us? It tells very simple. Tech is kind of like pulling most of the weight in the market right now. Technology stocks are right because S&P comprises of a lot more stocks. Technology comprises of pure tech stocks, the Nasdaq 100. That's why you can see that the RSI is slightly is aligned. But does it mean that we are not in divergence? Possible, right? But the whole market, you remember, right? It all shifts because S&P is what everyone looks at as a base ground lah. Okay, so QQQ is something that I'm also looking at because it comprises of tech. And if you ask me, right, in the next 5, I mean, you all let me know lah what you all think. I think probably you all are thinking the same thing as me lah, right? In 5 years' time, right, where do you think the market, what kind of industry you think the market will be on? Okay, I give you a hint. It's something to do with the things that we use every single day lah, okay, to help us save a lot of time. I mean, just think of it. I don't know whether some of you might be able to guess it. What is the thing 5 years time you think the market will move towards? Like, what is it on tech? Specifically, what sector in tech? Just time in the chat. Okay, I see SG has a question. Would you trade TQQQ instead of QQQ? Okay, so just for context, okay, let me show TSJ question. TJ says, would you trade TQQ instead of QQ in the bull market? Okay, so my answer to that question is yes, it depends. Okay, now for context, TQQQ, when I buy TQ is not trade. I don't do short-term trade just to share. Okay, for me, right, I always like to do longer-term trade. Okay, that means when I buy any shares, any ETF, I'm ready to hold it for 5 years long, guys. Okay, why? Because the short term I can lose. Simple as that. The short term you can lose one. So simple. You just imagine if you you are a day trader, right? You see, imagine you're a day trader, you buy here, okay, and you pray that the stock was short, then you buy, you short, okay, you make money here, then you sell. Next day you pray the stock was short, then you make money down. Then maybe next day you pray it was short, then you make money. Then after the 4th day you think that okay, it will make money, because you will probably touch this line. Then boom, you lose money, right? So in the short term, I will lose one. Okay, is not only me, everyone short term, right? Unless you are like a massive day trade 24/7, your eyes glued to the screen, right? You are better at the game. That so be it. But I'm not good at the game. I'm straight up here. I'm not good at short term. But guys, what is easier for me? The long term. Simple, right? I buy here. Let me circle. Buy here. If you drop, whatever. Long term, I still go up. Simple. The longer term you look at, the longer term horizon you have, you make money. Simple as that. So then the next question is, some people might say, hey, but Bjorn, don't make money, a bit boring. Every day don't make money. Guys, it's supposed to be that way, guys. If you make money every day, what it means, you have to take risks every day. You have to do a lot of trades. I want you guys to think about this. Imagine you trade, okay? Every time you trade, let's say you make 10%. Every time you trade, you make 10%. Right? To make 100%, right, you need to do 10 trades. Okay, and on these 10 trades, what you have to do, it's not every day, 10 days straight, you can make 10% one. Some day you down, some day you up. And every time the day you down and up, you have to consider that those are days that you trade, which affects your mindset, which affects your emotions, which requires you to stay up at night. Okay, which requires you to, because trading is all, you have to go and find the opportunity, you do all technicals, you have to spend a lot of time dedicated to the screen, know when to sell and things like that. Right, so minimum, you have to do at least more than 10 trades to make 100%. Right, more than 10, 20 trades, and you never know when. But guys, you buy stocks, you can make the same return, maybe in a much longer time, but why? A better peace of mind. Okay, that you're able to sleep. Yeah, right. So I'm not saying don't do trading, it's up to you, right? But I play the game that I can win. Simple as that. I only play the game that I have the biggest winning odds on. Right? If the game that play is not to my favor, I don't play. Right? Only play the game that you can win. Okay, every one of you type win in the chat, WIN. So now, how long is the long term? Stocks or options? Okay, to me, my long term is 3 to 5 years. Stock with options, I do both. Simple as that. Okay, so this is QQQ. All right, now these are the two main charts I look at lah. But I tell you guys that for this week, guys, what I am focusing on, the reason why you can see I focus more on macro is because this week we have very big news happening. Right here, literally on Wednesday 8:30. This, just now I shared with you guys the PPI, CPI, right? This is the update that's going to come. The whole market will be watching this. Everyone will be watching this, guys. This is what I'll be looking at. Okay, Thursday is the CPI as well. both the CPI and PPI. That's the reason why I share with you guys the macro chart today. Because if I only share you guys stock chart like, oh yeah, buy this point, buy that point. Oh guys, you all will not learn anything. But I want you guys to really be able to capture this kind of how the market is the heat of the market. Is it very hot now? Is it very cold now? Because if you can understand that, guys, not only the current time of today of what is happening, when you can understand how to analyze the heat of the market, how hot or how cold the market is, guys, in the long run, you will make a lot of money. Why? Because you will know where the market is moving generally. Imagine if you knew that the Federal Reserve, right, you follow that it was going to increase it drastically, right? During the 2021 period, you would have kind of like cash reserve out and kind of like de-risk on some assets. And you know that the price will correct or whatever, right? And then you will have bought in more. Hey guys, this is how, because short term, the market is affected by this. Long term, yeah, you still make money, right? But if you can find ways to understand the short term and incorporate in what we do investing, why not? Right? We become better investor as well. Okay, so you can see core PPI, core CPI, right? These are the things that I'm monitoring, and it's going to happen in less than 2 days. Right, Wednesday 8:30. I mean less than 2 days because now 8:52 already lah. Right, I'll be watching this because guys, and if this PPI and CPI goes higher, okay, right now again if it goes higher guys, if it goes higher, I tell you the Federal Reserve, like if it suddenly shoots up, okay, if it suddenly shoots up, the Federal Reserve will start to think, should we actually cut interest rate? Okay, that's what they'll be thinking. And if it shoots up high, I tell you the market will be in a shock. They will think like, hey, shit, are they going to cut or not? That's what I think lah. Okay, of course I might be wrong, but this is my personal opinion lah. If the price index, CPI or PPI, whichever it is, if it's around the same, maintain the same, I think that it will be taken positively. Right, markets like, okay, the Fed is still going to cut. Basically, this number, right, will affect the probability of people thinking if the Fed will cut rates or not. Simple as that. Okay, if this drops, it's good. If we see the CPI and the PPI drop, it's good for the markets, right? Because it means inflation is coming down, which is what the Federal Reserve want. And when inflation is coming down, it gives them more reason to reduce the rates. That's why it will be good. So the goal is, if we want to see the market rally, all-time high, we will ever again, we want to see this trend down. Okay, if we see this, if you want the market to go in crash correction, you want to see this go up lah. Okay, if my opinion, you ask me personally, I do hope. Well, of course, I call myself someone who I like to find this kind of views. I like to monitor the markets. Like I look at it every single day. You want to buy things at a discount or at a premium? Type in the chat. If discount, type discount. Premium, type premium. Okay, type in the chat. Because if you ask me, I want to buy a discount lah. Right, it got discount. You can buy like a $10 item at a $7. Why not? Right, like Shopee 99 like that. Just launch only today 8 o'clock launch already, guys. Make sure you buy from Shopee, guys. So if y'all can buy at a discount, why not buy at a discount, right? All right, yeah. See, Dion Magazine says discount. What about the rest of you? Y'all want to buy at a premium or discount? Okay, Leila says discount. AJ says discount. Yeah, lor, it's the same thing, lor. So this is what I hope, because in the long term, right, you buy discount, right, but these kind of great assets will appreciate over time. Okay, so that's all the charts that I have for all of you today. But guys, before I end off, I want to share with all of you guys, guys, if you enjoy all these kind of insights, right, I would love for all of you to follow me on socials. Okay, follow me on whatever you want. Okay, whichever platform you use the most. Okay, whether on Facebook, on TikTok or YouTube, whichever it is. Okay, feel free to follow. I share a lot of insights there. Okay, that is the first thing. Okay, so I'll just leave this on. I will type it in the chat, guys. But there's one thing, okay, there's one thing that I want to share with all of you. Okay, so guys, if you guys enjoy this kind of insights, right? Do you like this kind of thing or not? If you enjoy me doing this kind of things, can all of you type enjoy in the chat? So I know that y'all like this kind of thing. Okay, if you enjoy this kind of thing, just type enjoy in the chat. Okay, cause if you guys love this, I think that you guys will actually enjoy this next thing that I'm going to share with you, which is actually our options workshop. You guys can see now I have this QR code that's flashed right over here. So in this optional workshop, guys, just now what I showed you guys was just a snippet of the TA, right? You guys see I teach you guys about RSI, but in our options workshop, right, we not only show you guys TA, right? I know just now there was a question by Sundar, right? How long is stock is option? Now this is the exact place you want to be if you want to learn options, right? Okay, we're going to teach you the buffer accelerator framework to constantly earn annual income from it. That means a second side income. Now, guys, think about it. If you work, you go out and work, what will happen, right? When you go out and work, you are basically trading time for money, right? And if you want to get a promotion, you OT and everything, you are simply just trading time for money, right? For your boss. But guys, you all must remember the company will never, you all must learn how to take care of yourself because anything can happen to us, especially we know that things are unemployment rate. Anything can happen to the best of us, right? And it's nothing to do with you, right? So imagine if the time you spend can actually be used to learn a lifelong skill, right? And that's exactly where options step in, right? Where you can actually learn, and until today, that's what I'm doing now. That's what our students are doing. I mean, I saw a CP over here. These are the what skill guys, that when you use your time to earn, regardless of what happens to you in future, you'll be set. Simple as that. Okay, and you guys see, right? This some of the charts we see is we not only just say, oh, just do options, right? We show you guys how to look at this holistic view of everything that is happening in the economy. The best companies to do it on analyzing. So for those of you who want to kind of like learn, one of you just want to go and like expand on it. By the way, it's free to join. Just go and scan the QR code. Okay, go and learn about this framework. I recommend all of you to do it because if not, I hope that you are able to kind of like grow your income lah. But if you're looking to learn investing, especially in these days and age where it might get hard, right? Because we have to take care of ourselves, right? This is something that I think will really benefit all of you. Okay, so I'll just leave this link for all of you here. And now, right, okay, we have a little bit of time. I know we are running a bit later, but I want to open up this floor for Q&A, a very short Q&A for all of you. Okay. Okay, SJ says market drop then go instead of keep correct. Wow, SJ, I love that, man. Wow, SJ, you have a very, very strong mindset. I love it. So you are exactly right. Got momentum lah, but then you want to make sure that the momentum is backed by companies' fundamentals lah. Because if the momentum is being backed just because market expects everything to rally, it'd be hard lah. You're just going to look at Nvidia's recent earnings. Their earnings did exceptionally well, but actually the stock dropped after that because expectations were too much already lah. Okay, so this is just to share with all of you lah. Okay, so I don't know if anyone have any questions. Just feel free. I think we have time to take like another 2 to 3 questions lah. Okay, so just time in chat if you have any questions. And well, in the meantime of how the market is today, I think today right now it seems the market is green. Right, market is looking green so far, which is okay. I won't say it's a good thing. I personally I love it this more lah. Right, okay. So it's looking green now. Okay, but remember that you don't always have to do something every single day. Right, so that's why sometimes even though I'm green, I just like to go and read. Right, go and read and see what is happening to the markets, and like exactly everything that I share with you today is literally everything that I also do on a day-to-day basis. Okay, so you guys can see I'm just being open and showing you guys over here. Okay, so wait, no one, any questions? Hey guys, very rare that I come on over here one. Okay, so okay, I saw Karen had a question. Karen is asking, okay. Karen is asking why is Nvidia and Palantir price so low? Okay, so well, Karen, I wish I could tell you why the price is so low lah. Honestly, I also don't know. But to me, if you ask me whether they are low or not, Karen, hey, I don't think they are low lah. Right? I think honestly they are a bit stretched right now. In fact, I hope they are lower. Yeah, I really hope they are lower, right? So, I think now is a bit overextended. I don't think it's low. Palantir and Nvidia, Palantir has always been overvalued, even though when the Trump tariffs happened the other time, it was also incredibly overvalued lah. But it's because of the quality of the businesses. Whereas for Nvidia, right, I think it's just slightly overvalued, not very, very overvalued. But the reason is right now the market has that level of expectations for them lah. That's why you can see that it is not uptrend, and generally speaking the whole market is a bit extended. Okay, SJ says because they up so much money going, exactly right, money rotation because they up so much, right? Then there's a lot of things that happen in the market on a day-to-day basis lah, so people might be rotating lah. But for me, I don't really look at right, like, but Nvidia is one of the stock that I'm looking at as well. Okay, drink some water guys. Okay, Glenn says healthy pullback. Yes, of course it is a healthy pullback lah. Guys, you must know when the markets pull back, is a good thing. Okay, markets pulling back is a good thing. Never be afraid of that. Okay, a healthy market will always have pullbacks. You should be scared if the market keeps going up without pullback. Okay, you should be really scared of that, right? But because pullbacks is just how it's supposed to be in a market lah. When it goes up, it has to go down, up, like that one. Long term, the up is an uptrend, but there must always be down and ups. Simple as that. A healthy market always got healthy pullbacks. You must be scared if it keeps run up. The harder you fly suddenly very fast, right? The harder you will crash. Okay, the harder you fly, the harder you will crash lah. Okay, Bright Star says because of manipulation. I do believe there's a lot of things that happen that we don't see. Right, we are all just retail investors. Right, retail investors are guys. You must remember who are you fighting against? We are fighting against the hedge funds. We are fighting against a lot of people out there with people with bloody Bloomberg terminals or whatever it is lah. Right, we are all fighting with them. Right, so that's why what game are they playing? They're playing the short term game. That's why I tell you guys, right, I don't play the short term game because you are fighting against them. And they all got all those insights, all those insider out there. And I don't know whether they have manipulation. I have no idea. But I do know for a fact that long term things would the great companies will just come on top. So I'd rather play the game that I can win. Simple as that. Go Henita, still pull back, not super high P. Go Henita, I'm going to give you a little kind of like to make you think a little bit, guys. Don't only focus on PE, right? Don't only focus on PE, okay? Because if you focus on PE, right, even Palantir at $20, you never buy. Simple as that. $20 at that point, you will never buy. Because when it was $20 5 years ago, right, the P was crazy expensive as well. Look at where we are now. Okay, so it depends on the kind of business. Some business, yes, PE makes sense. Some business, right, PE don't really apply to in some cases. Okay, but yeah, for some businesses, you can use PE. SJ says, I just bought Nvidia again. Okay, Bjorn. Hey, SJ, I want to tell you whether okay or not, it's not for me to say, it's for you to say. Maybe you tell me, okay or not. Right? Because ultimately, why you buy Nvidia, right? It's not whether I think okay or not, guys. It's up to you where you're comfortable. Because if I buy, I can be okay, ma. But if you okay or not, you might not be okay with it. Right? It's like food like that. Like example, today I want to eat chicken rice, but today you don't feel like eating chicken rice or you hate chicken rice. Then you will not eat, ma. So basically, what works for me might not work for you. Okay? Sunda, good time to buy a long-term put on SPY. Okay, Sunda, very simple SPY, right? Okay, you all must know. Okay, so this is options, which is something that we go through in the class. So once again, guys, if you want to learn about this kind of option, do scan it because we go through all legs as well. So Sunda says, good time to buy a long-term put. Sunda, you have to think if is it insurance or not, right? Simple lah. If you want to buy a long-term put, right, you must be ready to lose that money because that's insurance. And again, long-term, you will be on an uptrend one. So the odds of you losing money is higher lah. I'm not saying you cannot do that. You can do that, but you have to see as insurance and you have to assume that money will be gone because it's the insurance, right? You don't expect it to exercise it, but you assume that the money is gone totally. Okay. SJ, SJ says, I'm not your sifu lah, guys. Okay, everyone here is all to learn from each other. Okay, I don't know what I don't know. Simple as that. Okay, and if I'm the smartest person in the room, a quote that I always tell myself is this: if I'm the smartest person in the room, I am in the wrong room. Simple as that. We're all learning from each other. Glenn, buy long-term put so risky. Yeah, it depends. If you think if you're long-term bearish, maybe that works lah. But personally, I don't short the market. Okay, guys, I don't short the market. Again, I play the long game. Shorting the market is a short-term game. You guys see the chart already, right? Long-term, we are up one. So I don't play the long-term game. I don't play the short-term game. Sorry, I play the long-term game. Okay. All right, guys. So thank you all for attending today's session. Now, if you guys want to see more of me, okay, so if you guys want to see a lot more of this live, you enjoy today's live, right? And you want to see more of it, can you type MORE? Okay, so if you all want to see it, just type more in the chat. Okay, then I will work with the team to try to come out a lot more frequently okay, to share a lot of these because I want to make sure all of you can at least take away something regardless whether you join this class and all like that. But I want to make sure that all of you are learning something and also just get to know more of you all But for the next week, I cannot guys, because the next week I going on, I need to serve our nation. Okay, I have to serve our nation. I'm going on reservist okay. But there we have a lot of other lives with other amazing speakers, guys. So I highly suggest all of you to go and take a look, because what we're doing now is to make sure that we can kind of get to know a lot more of you, share a lot more insights, and hopefully all of us can protect ourselves regardless of whatever happens Simple as that lah. Okay, so thank you all once again for coming. I really hope that all of you have learned something today and you have taken away something. Okay, be sure to like and like this video and subscribe to us as well, so you'll be notified when we have any different live streams as well. Okay, so thank you guys. Have an amazing night. Okay, don't stay up too late to watch the market. Okay, and don't shop so much on 99. Guys, control your wallets a little bit. Okay, all right. Good night, everyone.